Meet the Lot, native token of Lukki Exchange and the most potential tool for investing this year. Trade now on P2B, B2B and Lukki.io.
Opportunities and challenges from finance to crypto. Just a brief bit about me. I've kind of followed this space for some time. I was co-founded the first Bitcoin meetup group in London back in 2012. So the space has changed a lot, and it was kind of a distant vision that we might get to the point where we're having a discussion with people from organisations such as this. So it's interesting to see how things have evolved, but also fascinating now to see where we're at. Peter introduced everyone. I think we're going to crack on. There's been some news recently. Maybe if we start with you, Sam. You've helped lead a project at UBS, which started out being called Utility Settlement Coin. It's kind of now been officially incorporated with 16 shareholders as major banks, and called now Finality. So I guess some people might look at this, people have been following the crypto space, especially the last couple of years. Fiat-backed tokens and coins have kind of become quite prevalent, questions over kind of the legitimacy of some of them. And something like this now, this is kind of, I guess, could be called an institutional tether, really for that specific market. Could you tell us a little bit more about the journey of that project and what problems it's solving?
Sure. Some time ago, during our experimentation around digital assets, we came to the conclusion that actually the cash leg of any sort of transaction needs to be represented on-chain as well. Otherwise, you kind of made everything a lot more complicated. Imagine trading with tokens, and at the end of the day, you've got to go to this completely separate infrastructure in order to exchange the cash components. So selling something like that internally as an innovation was a pretty hard sell because we made things harder. So what you effectively realize, and I think we've seen that, and even the discussion earlier on stablecoins recognize that, is that you start having a spectrum of components. At one end, you have cryptocurrencies that enable you to exchange cash, effectively Bitcoin, etc. And at the other end, you have government-backed. We've had algorithmic and other stablecoins to try to peg. Then you have the corporate credit-oriented coins, so JP Morgan coin, etc. And then the nearer you get to the government-backed end, that was sort of the origin of the utility settlement coin, which said, how close can we get without having to ask a government to do this? So we will take the initiative to set it up, and we'll try to encourage the banks to participate, and we will create mini communities in each region for each currency pair, or each domestic currency, and then eventually a foreign exchange capability. And we would start with the institutions to oversee and operate that, to give the governments comfort in taking that one step to the right in the spectrum without saying, hey, you know what, we're going to use Bitcoin as the cash leg for all of this, which I think would probably be met with much reluctance.
Sure. I mean, one thing I know, I was at a conference maybe 3 years ago, and the Bank of England was speaking there, and their innovation team. And they were questioning, the idea in principle of a fiat, government-issued or central bank-issued fiat crypto money was interesting. But they questioned, if ultimately this kind of was available to everyone, the idea that everyone in this room could have a central bank account versus their kind of retail commercial bank account was probably going to be a problem for the commercial banks in general, because that's not how they work. Is that something, do you see us is this kind of an early step towards that kind of long game, or is that...
The intention isn't there under the scope of the Utility Settlement Coin and Finality International to take it down that path at this stage. It's there for the institutions to operate on as the cash leg. If the governments decide themselves to take it further, that's up to them, but it's not really the scope of the project as it stands so far.
Okay. I mean, Ruth, on this, again, as it's become quite a hot topic, we need to see if we can tokenize everything. I guess it's a question if that's ultimately a good thing. But if you are tokenizing other things, and whether we're looking at people building on public networks or developing on some of the private enterprise DLT solutions, such as maybe R3's Corda and Hyperledger, I guess having that fiat leg to be able to trade and instantly settle these assets is really critical. In your experience, in terms of innovation within maybe equities markets or other markets, how critical do you think that's going to be going forward?
Well, if you think about the real efficiency, I guess the settlement coin is a great example of creating the efficiency you can under the current regulatory framework, because you're effectively saying all we're doing is optimize velocity of liquidity between the big banks in a wholesale context, and we're using a certain type of technology to do so. We're not using cryptocurrencies. We're creating a technical vehicle to make things faster and more efficient between banks at a central bank level. And that was an idea I remember talking to UBS about 2014, 15. So the idea was there for a long time. The technology wasn't there at that point. And now, of course, these guys are not using Bitcoin proof of work to do it, right? So using a different type of distributed ledger and consensus mechanism. I think the sort of topic about tokenization is a pre-stage to what we would ultimately expect as money moves into a digital age. And the critical questions for central banks is actually, what happens if we are in a cashless society day to day? Everything would be in the commercial banking field. Let's say there's an attack, an outage. What happens if these people don't have any more access to any type of functionality of central bank money for the retail space to allow for this backup to happen? And of course, as we see in Marshall Islands and other more remote markets, it's really a financial inclusion game. It's not about narrow banking, disintermediating the whole of commercial banking space, but it's more at that retail level, which is a completely different area than the settlement coin, which is about wholesale market efficiency. I think we are moving into a space where people initially tokenize and allow for tokenized security tokens to be traded. But again, what is missing is the settlement. And I did a lot of research on settlement finality, working with central banks, and the question, how do you achieve a definition of legal or practical settlement finality in different types of distributed systems? And that's the sort of missing piece where we will have to find maybe a stock exchange coin to allow to settle the transactions that happen on that exchange, similar to the utility settlement coin, which is really on the wholesale interbank central bank connectivity layer, because we will not end up with a global cryptocurrency endorsed by governments, like a basket version, that we will be very far away from that. But in my mind, if we don't have atomic settlement, we will always have operational risk, lag risk, and legal risk, because the other payment process really happens separately to it.
Okay. So I think we've probably got a good mix of people in this room, many that have probably been around for years that have became engrossed in the opportunities for crypto assets such as Bitcoin and these public blockchain networks. It's very interesting to see, and maybe some of those would have maybe kind of like snitched their noses at the idea that these private DLTs aren't really solving anything. I guess there's a good argument that there's room for experimentation in Pinar, State Street is one of the largest global custody banks in the world. They have obviously a serious reputation to protect. You're head of their innovation team. How innovative can a bank like State Street really be? What's the challenges internally? And can they move fast enough, or are we going to just see all of these kind of the crazy wild west of the public blockchain space eventually just creep up on the outside and out-innovate companies such as like the major financial institutions?
Okay, fine. State Street also is one of the largest asset managers in the world as well, in addition to custody. But I was just wondering, beginning of your question, is this about innovation? Then we have a whole day. And but linking that to public blockchain and versus some of the DLT conversations and what's happening really beyond even technology, I think the issue is not exactly about if people can innovate or not. It's about how the companies can think of innovation while running their day-to-day business, and think about it in a way that is not only about one team, it's not only about one topic, but if you think about what's happening here, and I think this conference is exciting for that reason, we are really talking about a broader transformation around how the markets are changing. So that message is it doesn't belong to just one team in one bank. So in terms of being able to innovate, I think what we do as a team is we set our goals around the future of money, future of assets, future of markets. So settlement coin is now its finality. It's an independent company. Is one of those building blocks to think about future of money. I absolutely love the way you described cryptocurrencies to central bank digital cash. These are all different components of money, so we think about those things. I mean, these are all very foundational to our industry. Then we think about digital assets, and tokens, and these go hand in hand. And then when you do that, the next thing you think about naturally is the services that goes with assets and money. So you think about asset servicing, custody, and so forth, all kinds of things like that. So then you start thinking about the future of your industry. So when you think about all of these things, you do not really differentiate between public versus private blockchain. You really think about more the business problem or the future of like the utility of what you're trying to achieve as opposed to the tools how to get there. And I think that direction might take us to an interesting point. Of course, the challenges are, this is a very hard message. It's quite transformative beyond just technology. So for banks and in our industry, including also the clients, this is something to think about and internalize really much more than what we are probably doing today. So this venue is interesting because this mixture of banks and crypto, where you can inspire like what's really frontier, and then you think about how to actually make that happen.
Sure. I'm sure there's probably a number of people in the room that have, been working on their own startups in the public blockchain space for a while, and I'm sure every single one of them will have told you especially if they're interfacing with the traditional banking system, face challenges, significant challenges. I guess Sam as well, Pinar, do you think there's an unfair advantage in terms of how your organisations kind of have this wall of protection of regulation, and you're kind of keeping some of this external innovation at bay, where you can move at your own speed, and really you do have a certain level of, the broader banking industry has a certain level of kind of control over how fast things happen outside your walls. Do you think that's a negative thing for the kind of for innovation in general?
Maybe I can comment in that I'm relatively new to UBS, and having come from Reuters, the market data vendor, into UBS, this has been a bit of a wake-up call as to the role in which regulators play at banks. I didn't know the extent to which that happened, and think about trying to keep every regulator in every country that you operate happy with what you're doing and the way they want it done. That's quite a big tax. So I like Pinar's comment that for organizations like us, it's a bit of a challenge in what percentage of your OPEX do you spend on innovation versus keeping the lights on and delivering the revenue that needs to be delivered today, right? And that's a discussion you always have. As a startup, until you've got that first product, you're pure innovation mode. The moment you've got your first product or first 3 products, actually you're already having to make that trade-off. We're just a lot bigger in trying to manage the business that we have today and ensuring that stays up to the regulatory requirements that are imposed on it, plus what we want to do in innovation. So it is also one that is constantly changing and constantly requiring more investment to maintain the right to operate in particular jurisdictions.
Okay, thanks. So we've looked at, I guess, from kind of the more institutional side, Gabor, Vanek, you're kind of leading the charge and being far braver, I guess. Having a long history in financial innovation anyway, Vanek. You've been putting in applications to launch a Bitcoin ETF in the US out of New York. It's been there was a few of these that have been, a few different companies have applied. I think it recently got declined again, or was there a decision? It's in the application at the moment. Can you tell us about what's going on there? Because I think there's probably a lot of people quite interested to see where it's at. There's the assumption that once this is going to be a big trigger point, that when an ETF gets approved, just like in the gold markets, it opened up a whole new kind of opportunity for investment and created a significant rally in gold as well. So maybe there's some people waiting for that. So yeah, can you just give us a rundown on where it's at?
Yeah, certainly. So we are Vanek. My company is lucky to be in a position of being a private investment firm and with a long history of building what one may call unconventional products, or products that are early but sought after at the time. So you mentioned gold. In 1968, we built the first gold equity fund in the U.S. and for the Bitcoin and crypto and gold fans and fans of Austrian economics, the founder of our firm was a student of Ludwig von Mises, and we worked on the concept of hard money from the 60s on. And basically, when when we launched the first gold fund, I think it took about 6 to 7 years to get it approved, and we kind of went through a similar phase with like peer-to-peer lending, some of the first emerging markets ETFs, and now sort of the Bitcoin ETF. At my firm, we sort of believe that Bitcoin is digital gold, and you know, that might be, my background is in mathematics, and I know for a fact that it may not be the best analogy to bring, but you know, some people think about it in such a way, and in fact, actually, Bitcoin trades like 1/3 of a store of value of gold and 2/3 tech stocks today. But so on the, we thought, so we partnered up with Sawdex, a fintech firm, and the application is pretty much in for a physical Bitcoin ETF for about 4.5 years now in total. We've been working with Sawdex for about 2 years, 2.5. The hardest, so there were certain things that we realized in the process that were missing from a market structure point of view. Proper pricing of digital assets. Then we custody solutions and market manipulation related surveillance type of projects. So we addressed the pricing issue working with CryptoCompare and our index subsidiary MVIS, and built market standard crypto indices. So if you guys want to follow me on LinkedIn or Twitter, I'm happy to share more information on that. And we work with NASDAQ to provide market standard surveillance for spot trading platforms. And you know, some people might not like surveillance, but I think light surveillance is appropriate for any entity that is managing billions of dollars on behalf of their customers. So that we checked out. And then I think the final sort of outstanding problem is custody. There are not, you know, the State Streets, the UBSs of the world are not in the market right now, and institutions prefer some kind of solutions that have insurance balance sheets, some kind of traditional entity backing it. And while it's, you know, longer term, I think, you know, Bitcoin and decentralization will win. I like to think that we should walk before we run to decentralization. So maybe kind of work with institutions first, and then see if we can get ownerships of assets back to the individuals. But yeah, we work with the SEC primarily in the U.S. The regulators, and you guys might not think it, but they are actually very up to speed on crypto. They spend, you know, at this point somewhere between 3 to 5 years learning about the space from the best industry experts going to them, you know, including us. And so ultimately, we will. I believe that we're going to see a Bitcoin ETF down the line. The custody landscape has to firm up before we do that. But I just wanted to point out that a lot of people talk about tether and market manipulation as being the biggest problem for this space. It's not the biggest problem, because there is surveillance, and in fact, some of the crypto exchanges have stricter standards than banks in their sign-up process. They're just right now, because the status of digital assets is unclear. So those who are dealing with digital assets, that's the issue at crypto exchanges, and that's the issue with custody as well. So again, we're working through all these issues, and I think, you know, the fact that we're on a panel with some of the largest banks and discussing digital assets is definitely a good sign.
I mean, Pinar, you mentioned obviously State Street being you know, significant asset manager as well. What's the actual demand from a typical State Street client? Do they actually want access to this asset class? I mean, I think custody is obviously a big issue, which is holding back institutions generally. I think there was a bit of excitement last year, and a lot of people kind of looked over the fence, thinking everything would just be the same as they know it in their old world, and realised it wasn't quite as such. You know, is there actually a demand from institutional investors to get exposure to these asset classes?
Yeah, it's interesting because I'm just trying to think about how to answer that.
I know that's not your department necessarily.
No, yeah, and also it's not about just our asset managers, it's just overarching, I guess, the client segments, if you think about it. So, I mean, it's a global bank, and with lots of jurisdictions, right? I mean, our APAC business is different than probably the demand in the European business and so forth. But across the board, I think the right way of thinking about this is, in general, the topic that seems to be emerging, somewhat, is the digital assets topic. I think there is more of a education in the marketplace if we think about it, that needs to happen between the differences between different types of digital assets. Like if you think about cryptocurrencies as part of digital assets umbrella, then you have all the other tokens of utility tokens, STOs, and so forth. And I think the interest is not quite uniform. So you have, if you think about this, it's a very hard question to really answer because we are really in earlier stages and you have a fragmented understanding and an interest probably level that's coming.
If I could add to that, so it's just observation, or at least a framework we've tried to introduce at UBS, which is if I can ask you all to imagine a 2x2 matrix of fungible, non-fungible, unbacked, and backed as your 4 quadrants. Right? So you have your fungible, unbacked, which is your cryptocurrencies today. We're not, as UBS, we've decided we're not going to participate in that market. Bitcoin, Ether, Dash, Litecoin, whatever. Just a strategic choice. Risk reward isn't there for us. Then you have your unbacked, non-fungible, which are your ERC 721, CryptoKitties, CryptoPunks, CryptoFish, whatever you like. Collectibles. Interesting market. Actually, there's a space there where investors that are into collectibles are really intrigued about the fact that this offers them the ability to have a fraud-protected asset that they could invest in. And also the provenance of that asset. So imagine owning something that was previously owned by somebody famous. That's bragging rights for some people, right? Then you have your top right corner, which is your backed fungible, so equities, bonds. We have a separate matrix for that specific market in particular, which looks at everything from public equities all the way through to venture play into identifying which sub-markets are interesting. To be honest, public equity, not that interesting because we haven't managed to demonstrate an operational benefit to a very sophisticated and evolved market, but something like private equity or venture capital plays quite nicely. So you'll probably see some activity across the industry in that space. And then the bottom right, which is, if I can remember, backed, unfungible, non-fungible, which is real estate, art, wine, all the rest of those traditional assets, but digitalized. Again, very interesting space, but the taxation rules and legislation play a really big part into whether you're able to actually realize the potential benefit. So, for example, in Switzerland, if you want to transfer property, then you need a physical signature on a piece of paper for that to be recognized by the law. Kind of throws it in the face when you want to do this on the blockchain if the person then has to go and sign a piece of paper. But that's the law. So technology there, legislation isn't. Similarly, tax, property tax and exchange and the tax you pay when you exchange property, it has very specific rules based around the fact that we don't trade property every 10 minutes, right? You buy a house and it's a one-off event and that's the tax you pay. So the laws aren't there to necessarily enable some of these sub-markets. And again, we have a totally separate matrix that enables us to think about where the opportunities might be in that space. So hopefully that's a framework that might be useful for everybody to think about digital assets overall and that we're thinking well beyond how do we trade Bitcoin.
I mean, on that last part of that matrix, I mean, I think we've kind of touched on this before. It seems to be people getting excited that by tokenizing things, we create liquidity anyway in the market, which generally, you can chop things up. You've had REITs, real estate investment trusts for ages. You can buy fractions of real estate. It seems to be this push that, if we fractionalize and tokenize everything, it would create more liquidity. But surely that's more of an information problem. That's always been an information problem. It's very hard to, revalue property on a very, ongoing basis correctly. So, do you think this is just something, this on the security token side, Ruth, maybe that, is this just something that's being perpetuated as a benefit which might not really be there?
Yeah, I think so. I mean, the example of, again, the utility settlement coin is you can truly accelerate velocity of liquidity. And that is a liquidity benefit because liquidity can move faster. And this is only about applying a certain level of technology to an old problem that couldn't be fixed before. But if we go into, money, tokenized asset that needs settlement, we're talking about a very different framework. And the question is, how much can you do at a contractual level between certain parties that are part of one network versus, the dream of cross-border, including fiat and regulated pieces. But I do think there's also a question as to whether you can maybe create new asset classes in a more synthesized way, faster with certain types of new technology, including this, and therefore be more innovative when it comes to investment opportunities. But then for me, the cross-border is a key part, and for that we need more regulatory certainty at a global level.
Synchronization.
Yeah.
Pinar,
Can
did
I
you-
just add something? Because I think we really need to remind ourselves that these are all building blocks. Like, you're not going to get liquidity distribution advantages, which is usually, frankly, it doesn't matter if it's you're a bank or an asset manager or you know, that usually liquidity and distribution seems to be two themes that are important, but you're not going to get those benefits immediately. We are really going to be, and we are going through these on-ramp, off-ramp issues. And on-ramp, off-ramp is not just technology on-ramp, off-ramp. It's market structure on-ramp, off-ramp. I mean, just fractionalizing something tomorrow, we all know, doesn't really help. But if we actually get the ecosystem market structure right, slice by slice, which I think we're all working on, regulators are part of it. And I mean, then eventually this is, frankly, we are sailing in its transformation of our you know, industry, and also probably the way that we do things in general, in a way.
It's the sort of internet of value, right?
Yeah,
As soon as it starts permeating in a proper way with the right underlying technology, interoperability will become a question, fungibility, recognition, but ultimately creating an internet of value where different hubs communicate with each other, allowed under their own relative governance, is the sort of end state. And I think we're doing all of these little pieces at the moment to figure out which blocks work well together and which blocks have to become more mature to be applicable.
Okay, I know we're running out of time, but so I guess that leads a point of a final question in. You know, DLT solutions are just the equivalent of intranets and extranets, walled gardens, you know, AOL in the early days of the web, protecting everyone from that, you know, that dangerous world out there, and that eventually the walls will come crumbling down. So just to finish up, I guess, from each of you, longer-term vision, do you think, Gabor, do you think that will actually ultimately happen, however long it takes? Do you think we're just going through a process of people getting comfortable with the technology, learning, you know, getting the broader infrastructure, changing regulation, and do you think gradually everything will permeate out onto a broader, you know, internet of value, as Ruth says?
Well, I wanted to remind everyone that Bitcoin is the hardest money today that ever existed. And its use case is to be this trust minimized borderless money that no government controls by design. So, you know, that use case in itself will remain intact, and gold was in that position and still is with $7.4 trillion. So there's definitely some potential that Bitcoin itself has as hard money. And then secondarily, there is sort of like tokenization or exercise of real assets that needs on-ramps, that needs work. Most of the DLT that exists today is super low quality, inefficient, and it may need work. I'd recommend the group to think about building on Bitcoin or something that's decentralized and exists already versus using the traditional system. You might find benefits in your group. And just one last thing, if you work at a bank or institution or startups, the one advice I have for you is not to give up, because it's the hardest thing to do.
I'll take that. Okay, so I do think that this is really beyond public-private thing. I will repeat the same situation. I think a real problem-solving way of thinking, engineering way of thinking is literally think about, you know, how you can actually solve the problem with the best available tools, and depending on where you're going, what the direction of travel is. I think we talked about direction of travel, and we should be thinking about we shouldn't be thinking with the constraints of this kind of blockchain or this kind of blockchain. And of course, there are design choices that people make for their certain use cases, internal, external, but I think this is beyond that.
Sam, some final words?
Well, the intranet still exists now, right? So what, we're 40 years into this. So I still think there's a role for selective disclosure of information in the same way that you don't tweet every time you spend money what you spent money on, even though in Venmo that's the default setting, which disturbs me somewhat. But you know, so I was speaking to a South African bank that said pretty quickly, if we were to enter this and all the information was openly disclosed, then people would work out who we were in the market within an hour, given that we're, you know, the center of the universe when it comes to trading gold, a disadvantage. So where enterprise and business opportunity meets the world of being free and open, and there's a conflict of interest around information disclosure, and that will probably live on for us. But how that manifests itself technologically, I don't know.
Okay. Ruth, final word?
Yeah, I
We need
think
to go.
you know it's not about retrofitting the old world into the new technology. I think we see a lot of interesting evolutions in types of distributed ledgers, consensus mechanisms that allow for privacy, that allow for efficiency, and as we start seeing that, there will also be a shift at some point in business models. It's not about just replicating the old in the new, but I would agree that when anything business related, digital identity related, has to be safe and secure, and there's no need to publicize everything. So clearly, Bitcoin has one operating model, but for the purposes of sovereign regulated markets, we're really talking about very different needs, and these are now in the pipeline in terms of being delivered as the underlying tech that we start to see.
Okay. I guess that's a TBD. Then we will see over time. Thank you to all our panelists, and thank you for watching.